This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech plays in the world today. Okay, let's roll.
Hello everyone, and very much welcome to another Breaking Banks Europe session. This is episode number 196. It's news from the FinTech front, and we've got a couple of distinguished guests for you today. Jason Mikula, welcome to the show.
Don, thank you so much for having me. Great to be here for the first time.
Great to have you here. And we've got Mary Wisniewski, all the way from Vegas. Good to hear from you,
Los Angeles.
Oh, Los Angeles. I'm sorry. Yes, you're going to Vegas. That was it.
Shows, yeah.
You're not there yet.
Please, let's not spread the memo. I live in Vegas.
Thanks for joining, Mary. Great that you're here.
Thanks for having me. Also the first time. Jason, we're having a first time experience together.
Yeah, great to have you here on the show. I'm looking forward to have a chat with you about everything that's going on in FinTech over the past week and how you interpret the news, and definitely like to exploit our Europe-American angle here that we have got this as a unique session here today. Mary, you work for Cornerstone Advisors. Could you tell us a bit more about what you do there?
Yeah, so I am an editor at large for Cornerstone Advisors. I help shape their content and do a newsletter called FinTeching with Mary and do a lot of panels, but yeah, just helping shape FinTech content, podcasts, videos, and short form stories.
Great. So you're way deep into the industry, and so we should definitely be able to extract a couple of really interesting insights from you.
Yeah.
Great to have you. Thanks. Jason, people might know you from the FinTech Business Weekly. What else are you up to?
Yeah, so in addition to writing and publishing at FinTech Business Weekly, I also do advising and consulting in the bank and FinTech space, really across different verticals and geographies. So, I mean, it's interesting. This is Breaking Bank Europe, but you have two Americans here. Yeah, we'll do our best. We'll do our best to live up to the high expectations. Yeah. I do also work with clients in the UK, Saudi Arabia, Mexico, and LATAM. So I really like to think I have like a bit of a global banking perspective now.
Great. Well, I think I really appreciate the outside in view that you might bring here on the European market as well. So I think we should definitely exploit that today. So great that you could join. First of all, maybe Jason, I think we talked a bit in advance about what's going on in the UK with regard to Apple Wallet. I wanted to pick on that if you want. So what do you think about that development that you could actually check your bank balance in the app now?
Yes, I mean, this I think is interesting for a number of reasons. For listeners who didn't catch the story, Apple Wallet in the UK is now leveraging open banking to allow users to view their current account. For any American listeners, that's a checking account balance directly within Apple Wallet. In other geographies, specifically in the US, Apple has made further pushes into financial services through Apple Card, which is a credit card in partnership with my former employer, Goldman Sachs, as well as Apple Cash, which is both a peer-to-peer payment mechanism as well as functionally a prepaid debit card with bank partner Green Dot. Also acquired, if I'm remembering this correctly, Credit Kudos, which was a UK-based sort of credit scoring,
social rewards, credit scoring, yeah, exactly.
Credit scoring that used open banking data to sort of compute and help underwrite for loans. So, I mean, clearly Apple is making a very strong push into financial services. This, I think, it's interesting because it's taking the most common task that somebody does when they open their banking app. So in the UK, that'd be like whatever, Monzo or Lloyds or HSBC, and instead of needing to open their banking app to do that task, which is what's my balance? How many quid do I have in my wallet? They can now do it directly within the Apple Wallet. Presumably, this is a precursor to other capabilities that are enabled by open banking and PSD2. Makes perfect sense alongside the ability to store payment credentials and pay for things in Apple Wallet, right? So on the one hand, like from a UX perspective, this should be a win for users. Why open my banking app if I can just open Apple Wallet or integrate it? You can imagine other integrations. Before we hopped on, Mary was talking about the idea of surfacing your bank balance or maybe your credit card balance before making a transaction to encourage, maybe more thoughtful spending behavior. So I imagine for Apple, this is perhaps a relatively minor UX enhancement, but I suspect it's the first step on a longer journey of pulling more banking, not just information, but banking functionality from the underlying bank and into Apple's UX and Apple's ecosystem.
Yeah, I think it could be quite major, right? So it's that it actually takes the eyeballs away from the banking apps and the interactions that you might have with your bank, because they're also checking the account balance is still one of the major reasons to actually be in touch with your bank. What's your take on this, Mary?
Yeah, I was just thinking, well, I have two thoughts there. To your point, I wonder if, I remember rewind the clock, like, I don't know, 7 years ago, banks would say they're shared customers of Mint. It would be like, it wouldn't cannibalize it because people would log into Mint and then have follow-up questions like, is this true? Like, let me get into my bank account. But I wonder, with this Apple thing, I wonder if it will drive less engagement directly with the mobile banking app. But I also wonder, what effect it will have on consumers spending. There's maybe it could make someone take a pause on buying something, but also it's like a lot of people still don't like log in to find their balance because it's so low, right? So it's like that's a psychological barrier. So like for that kind of person to then see the balance that they might not be checking, I mean, I wonder what happens then.
Yeah, whether you could nudge people to actually be more cautious in their spending or other ways of actually supporting them there. Yeah. Yeah, quite interesting, I think, to see what that could bring. What do you think, Jason, that actually is also part of the intention behind this, or is that maybe circumstantial?
I mean, at this point, I would probably say circumstantial, but I mean, there are other data points to suggest that Apple may take a slightly different approach to how consumers interact with their finances than perhaps traditional banks would. And the example I would point to is the Apple Card, which is a credit card in the US. The UX to select a payment amount functionally encourages users to pay more in order to pay less interest. And I think if you contrast that with the typical, sort of typical bank approach, which would be, this is your minimum payment. So it's like the smallest amount that you're legally required to pay, and this is the due date. If you want to pay more than that, you can pay your statement balance or some arbitrary amount. So I think that there's some evidence that Apple is taking, a quote unquote more like customer friendly or encouraging financial health in a way that historically establishment financial institutions haven't. Could what they're doing here in the UK with Wallet, be consistent with that, or a first step on building some kind of like PFM, a personal financial management tool that surfaces some of this information? It could be. I mean, the open banking in Europe and in the UK, in some regards, is substantially more advanced, or I guess in a sense more stable than the US, given that rulemaking to govern that is happening right now, actually. Well, maybe not if the government shut down, but it should be happening right now. So you could imagine Apple making a play to build out some of those capabilities within Wallet with access to that underlying data that they can get through open banking.
In the States, at least, Apple keeps touting its like card and its savings product with Goldman Sachs as a play for financial health, being like you can move the credit card points or whatever. What's their term, Jason? It's not points, but the point
It's a reward, a daily cashback or daily cash.
Thank you. Yeah. So you can like just funnel that straight into your savings, and they're marketing it as that's a financial health thing. But the rhetoric about Apple years ago was just like, oh, what if they could do the fitness trackers, like what if they do that similar concept for your money? I mean, I think that really remains to be seen, but I'm really interested in what they'll do from a PFM or a budgeting or just more a mindful spending perspective.
Yeah, I think it's also interesting to see that because we've seen a lot of PFMs come to the market over the past years when open banking was the big promise. I think this could also be the big killer of all these independent platforms that try to become the intermediary, like the money supermarket kind of idea, where all these independent platforms would have a tough job actually fighting Apple with these kind of features and data.
Totally.
No, I think that's right. I mean, the PFM space has had a long history of like, is this a company or is this a feature? Mm-hmm. And then you see, incumbents either acquire or build their own tools that answer kind of similar questions. I mean, I think something that's interesting about Apple, given their control of the hardware itself, the software layer, the operating system, and a lot of the services that go along with it. Every time we see a story like this, it tends to touch off a round of, oh, is Apple becoming a bank? I mean, first of all, in the United States, like legally, from a regulation perspective, that's not even really possible. But more importantly, I don't really think that's what Apple wants to do. Apple tends to focus on being a platform business where either what it's offering encourages users to be further locked in and spend more in that Apple ecosystem, and or charging a sort of toll, which is what Apple Pay does, at least in the US market, where every credit transaction has a 15 basis point fee that goes to Apple, and every debit transaction, I think, is half a cent. So it's like, do I think Apple actually wants to hold that savings account or hold the credit risk of issuing a credit card? Not really, but by controlling the UX layer, is there data that Apple's accruing? Are there additional revenue streams that Apple can accrue by having that sort of platform without having the annoying responsibility of actually running a bank?
Exactly. I think they're in a really interesting space. Yeah,
they are. And I opened an account through them, and I was fascinated, sadly, because I'm fascinated by the customer service of a quasi bank product. But just even like I was like texting or messaging with a customer service thing. But I remember I was trying to pay off the card for the first time, and it was saying like my payment would take 11 days. So whoever I was talking, I was like, something's weird here. But also the customer service person is like, did you link a checking account? I'm like, yes, but. And then he was like, you need it. And he's like, do anything other than that? And I'm like, what do you mean? Like what? And he's like, a debit card. And I'm like, oh, does he not realize the debit and checking is linked? So then I was like, what is going on with this customer service? Anyway, so.
Funny. They have some spare people in another department, perhaps. Yeah. Interesting experience. Cool. I think it's quite interesting to see that. I think, and let's say one of the potential consequences of these kind of developments is that banks get pushed back into the value chain and become less visible, and that's of course why we're talking about things as open banking, for example, or open banking, but also embedded banking or embedded finance. But also they make strikes back, right? So I think, Mary, you had an interesting example of an action by JP Morgan. Can you tell us a bit about what you see that they're doing now to actually enhance their offering further into the market?
Well, we'll see what happens. But they partnered with, why am I always wanting to say the wrong word, Jason? Gusto. We settled on that. Yeah. Okay. To do like payroll for small and medium businesses. And I'm just fascinated by this for two reasons. One, this big bank is partnering with a FinTech company, and it's just not that common from Chase's perspective. And two, small business banking has been really a sleepy area. You'll hear a lot of people say Amex and PayPal, like and Square, own the market. But you also hear there's so many banks in the US, and they want to grow their deposits. They want to capture the small businesses. And yet you don't really see any examples of this. So I'm just drawn to this because here's a huge bank doing something for businesses. And that's not the most typical thing you hear about.
So you're a bit skeptical whether it's going to succeed. If I
I'm
listen
always
well.
skeptical if anything's going to succeed. Yeah.
And so, what is that mostly on the partnership that they have with Gusto, or is it more on the fact that they are sincere about actually wanting to serve SME customers?
I mean, that's an interesting thought exercise. Sincerity in a bank. I don't know, but I mean, just from the brand alone, it's worth following. Two, just from the fact that it's big bank, fintech company partnering, not typical. That's interesting too. And I'm only skeptical because, there aren't so many examples of like success, right? Like there's not that many, and this has been going on a long time. And I'm not talking just about small business. I'm talking about anything in fintech and banking.
Yeah, true. What's your take on this, Jason?
Yeah, I mean, my initial reaction is it feels like a defensive move, particularly given Square's efforts to move from, the sort of really like mom and pop SMB further up market. I mean, I think that to Mary's point, you haven't really seen many banks try to innovate in the services they're offering to small businesses. I mean, it tends to be, here's a checking account, maybe if you're at a certain size, here's a business credit card. Square has done, I think, quite a bit of interesting development in that space and gives merchants reasons to consolidate different capabilities onto Square's platform. So, I mean, I think one of the really interesting examples is like, okay, if you're using Square for payment processing, Square, through its division, Square Capital, can better underwrite and offer you a loan because not only of the data they're getting, because they can see your card transaction stream, but perhaps more importantly, because they have sort of first dibs on repayment, and that de-risks Square in writing those loans. So, I mean, that's an example of something Square does that, if you're a mom and pop bakery and you go to JP Morgan Chase and ask for a small loan, I'm guessing that they would tell you to leave. and
makes you laugh.
Like,
well, also, I think a lot of small businesses just use credit cards, right? Because the terms of a small business loan are like high rates.
Yeah. Well, and I was just when you were expressing your skepticism, Mary, remembering that at one point the marquee fintech partnership for JPMC was on deck, and after we probably forget because On Deck, collapsed and got sold for like 90 million during the pandemic. But, that was a 3-year partnership from, I think, like 2016 to 2019 that I wouldn't characterize it as particularly successful. So, I mean, I think, when you're talking about a bank at the scale of Chase, I think it's hard to find initiatives that move the needle. And to another point Mary made, JPMC has a history of acquiring and building their own. They don't have a long history of partnering. So I am curious to sort of watch what the uptake is from Chase's SMB clients as far as using this for payroll. If you're a small business and you have employees, you already are running payroll, right? So there needs to be some incentive to switch from whatever your existing solution is. I mean, if it's literally writing paper checks, maybe there's a strong enough incentive to Chase and this partnership with Gusto. So I'll be interested to see sort of how this develops, what the uptake is, and if it really works for both sides, both Chase as well as for Gusto.
Yeah, and like Jamie Dimon has been so vocal against like fintech over the years, or rather like it's coming for us or whatever. And so like I think that's just an added dimension of why this feels novel because of his public statements out loud. So like, yeah, again, Chase working with a fintech, notable.
And so, what if it doesn't work, right? So, is there anything? What would you expect in the market? So, do you think that actually, indeed, SMEs are going to be served by other companies in the long run, because it's just really hard for these bigger firms, these bigger banks, to actually collaborate with these kind of platforms or come up with their own solutions to actually serve SMEs properly?
Well,
What do you think about that?
I don't know, but if someone is able, if a company is able, a bank or anybody can just make it quicker for the small business owner, can make anything easier, that I feel like use will be high, because, small business owners they're getting loans that are expensive, and they're doing that because it's quick. They can get cash flow quickly. And that's like one of the biggest things for a small business. So if there's any kind of like truly innovative, helpful thing on that front, I feel like it would succeed.
Yeah.
I mean, there are a number of sort of neobank type companies focused on the SMB space. And I'm cognizant we're talking about the US, but this is a US story. Novo, Bluevine come to mind. The sort of Mercury, Brex, Ramp have a little bit of a different segment, that they're really aiming for like venture backed, like scale up kind of companies, not like the bakery, the shoe store kind of thing. Again, I think it's like when you're a bank the size of Chase, it's hard to move the needle. Whereas if you're Novo or Bluevine and like the only segment you're focused on is SMBs, you can dedicate 100% of your resources of product management, of engineering, of partnership to really understanding what are the problems my customers face and what do I need to build, buy, or partner to better solve my customers' problems. Whereas, again, if you're a Chase, if you're a Wells Fargo, it's just, oh, well, we have SMBs because they come into the branch or they've always been our customer. Like we're not worried about it. So I do think the level of innovation when you're really focused on one specific type of customer and their problem does tend to be different than when, you're a many trillion asset institution.
Yeah.
And Jason, we didn't even smack talk Fin. Chase, Fin by Chase by Fin, whatever. Didn't work.
Yes. Yeah. Not successful.
Yeah.
It's tough. And of course, it's also tough because we know that the regulators are very much on top of these firms as well. And also because of that, we might actually see some funny things like, for example, Chase UK also blocking crypto transactions recently announced in the news. Jason, you picked this one up. What do you see? Where do you see this heading?
Yeah, so I thought this was interesting for a number of reasons. I mean, Chase and their expansion into the retail banking sector in the UK, I actually think, without having dug deeply into the financials of it, has been relatively a successful launch. Which is saying something, right? I mean, the UK banking market is highly concentrated with a handful of incumbents. Yes, you have your Monzo, Revolut, Starling, but they tend to focus on or tend to attract customers with, smaller balances that generate fewer deposits, less revenue. Chase has taken a very aggressive approach to launching in the UK. Which is consistent with other product launches they've done, right? I remember when they launched their Sapphire Reserve credit card, and like everyone was rushing to sign up for it because the rewards were so. It was like $1,500 worth of rewards to sign up. The strategy in the UK has been, high rates on savings, market leading rates on savings, and I believe cash back on debit, which is not a thing in the UK. So that's a great way to buy customers. It's expensive, and eventually you have to sort of tailor those back. That's why this caught my eye. I mean, stopping customers from buying crypto, and again, this is only Chase's UK customers. On the one hand, you could make an argument that they're taking a proactive step to protect their customers from a sector that is rife with scams and fraud and, numerous complaints of customers, losing funds. On the flip side, is this the right role for a bank versus banking regulators or other enforcement agencies to protect consumers from this risk when, these are at this point, legal transactions. If I'm a UK Chase customer and I want to move money, into a crypto exchange, is it appropriate for Chase to be making the decision to block those transactions? So, I mean, I think I see arguments on either side. I think given that Chase is relatively recently chartered in the country, are they getting some regulatory pressure, behind the scenes? And this is a way to diffuse that situation? Maybe. I mean, that's speculation, of course.
Yep.
Yeah, you're raising all the important questions because, but I think the most important one of all of those is what's at stake when a bank is controlling decisions of, what can happen. I mean, to me, that's disturbing. It's censorship, right? But you raise other really great questions too. But yeah, when a bank is controlling our destiny, I don't know. I have follow-ups.
Yeah. That is really interesting because you do see that regulators are actually increasingly using commercial entities as their basically extension to enforce certain rules in the market. And I see that on one end, you see that through different means, as in potential higher compliance cost because you're under a higher scrutinized regime. Or also, for example, we see that around money laundering prevention, that the costs at some point become too high and therefore customers get excluded. But it's an indirect way of the law basically being enforced where, at some point the commercial entities have to fold in because they just can't do it on their own under the circumstances. But it's definitely, I think, also a very important question that you raised, Mary, whether this is something you would want these entities to do. Why aren't the regulators or policymakers just not calling the shots directly?
Mm-hmm.
I think the AML comparison is an interesting one because you have two different public policy objectives. Stopping money laundering and the crime that is facilitated or that the proceeds attached to that are coming from. On the flip side, you usually have regulators. Politicians pushing for financial inclusion. And Don, to your point, these are actually in tension. The tougher your, AML, KYC onboarding procedures are, increases the likelihood that marginalized customers, may not actually be able to access the financial system. And so those things actually end up being in tension with each other.
Yep, totally agree. It's quite tricky, as sometimes also at some point, for the lack of being able to investigate further, whole industries at some point get excluded, for example. And this could already be on a reputational level, but overall, this you could argue whether actually that's to the point of including customers is really helpful. Yeah, curious. So, what do you think, Mary? Where should this be heading? Do you think that other regulators are going to step up? Because I think this is, at least in Europe, I see that the policymakers actually are trying to get more hands off. So probably we'll see more and more activities that the banks are forced to actually take kind of measures indirectly because of policy decisions, rather than being enforced directly. I would expect.
Because you always hear different things. Certainly, banks are being regulated aggressively. I'm curious, how long have we been talking about the CFPB passing the 1033 related to data portability? I mean, it's years. I don't know. Is that supposed to happen this year or next year? I mean, it's just the thing that keeps going.
Yeah, so for European listeners who aren't familiar, 1033 refers to a section of the Dodd-Frank Act, which was passed after the 2008 financial crisis. It was passed in 2010, so 13 years ago, that calls for consumers to have a data access right. The CFPB, which is a consumer protection regulator, was in charge of developing the regulations to implement that. And I hear that a proposed rule should be published in the coming maybe month. But again, given that the government in the US may or may not be funded or open, plus the oral arguments in the Supreme Court case challenging the constitutionality of the CFPB's funding mechanism, just generates this endless cloud of doubt and delays.
Yeah. So.
Yeah.
Yeah.
Have fun.
Yeah.
So that's in any case something to look out for, Mary.
Yeah, for the next decade.
Yeah, exactly.
Yeah.
So anything else that caught your mind now? I think we're almost at our time. So I think I'm really curious if you have any last news or perhaps items or companies you want people to look out for in the coming weeks.
Well, this might have happened even in August, but there was a new PFM. We've mentioned PFM quite a few times, but one of the things that's happened over the years is like the traditional definition of that, like budgeting charts, pie charts, really low use, like not most people don't want it, etc. But there's a startup that was building something that was like trying to weave in like mindfulness and like it almost seemed like therapy meets money. And I am really fascinated in general about like therapy and money stuff and like how it might work within an app, but also just like I think these things haven't been linked deeply, and they ought to be because they're tied. So that's a general thread that I am following.
Wow.
No, I think that's a really excellent point, and I ascribe part of it to the fact that a lot of people who are building, who work in banking or fintech and work in financial services tend to be, I just call them Excel people, but like they're the charts and graphs people, which to be fair, that's how I want to like analyze my money. But, money, financial services, the big decisions, buying a house, sending a kid to school, inheriting money, these have very strong emotional components to them, which historically financial service companies and the experience of them, don't acknowledge or take into account. So I do think there's quite a bit of interesting opportunity. Maybe it's not directly at your bank versus, some sort of financial advisor, financial coach, whatever the right language there is, to incorporate that when you're helping somebody make a plan, whether it's about saving to buy a house, whether it's paying down debt. If you don't acknowledge that there is this very real emotional component there, you're probably not doing the best job you can to help that user achieve the outcome that they're trying to achieve.
Yeah, great. Yeah, really interesting example, Mary. Any last point from you, Jason? Anything that you're looking out for over the coming period?
Certainly the 1033 rulemaking in the US that Mary referenced. It sounds like Mary and I will both be in Las Vegas next month for Money2020, where also the comptroller of the currency is speaking. So I will definitely be interested to hear his remarks. Certainly watching what's happening in the banking as a service space, both in the US from a regulatory perspective, as well as the UK and Europe, always top of mind.
Yeah, cool. Thanks. Also looking out for that as well. I'd really like to thank you for sharing your insights today, Jason and Mary. I think it's been a really fascinating conversation, and especially very enlightening, I think, for a lot of Europeans that weren't also so familiar with the US market. I think I also learned a couple of things here and there. So thanks for sharing your insights.
Yeah, thanks for having us, Don.
Yeah, absolutely.
Looking forward to meeting you in person again sometime soon, and I would love to wish you a very nice stay at Money2020 in Vegas. In any case, perhaps we could actually team up after that to hear about your takes from the conference. That might be a good idea. Hint there for our team. So thanks for now. I'd like to wish you a great rest of the week, and see you next time on Breaking Banks Europe. Thank you very much for listening. My name is Don Ginsel, and see you soon.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.